Hey everybody, welcome to a fun story. Well, not so fun story, but we're going to look at a whole bunch of different information. And we're going to talk about some on-chain data, some debt numbers, some reset information, central bank digital currencies, some reset. We have a volume, which is good, volatility, Bitcoin, some on-chain data, talk about some NFT drama, look at dev movements in crypto, stocks, what should be a worry, what is FUD, centralization, unemployment versus inflation, and a ton more. So let's try do this. Again, if you learn something, hit the like. That's all I ask. Thank you all. So let's jump in. I call this the holiday hangover. And no, a Christmas rally did not happen. A Santa rally where everyone talk about it. And this is edutainment. It's just numbers being presented. But let's start with this. This is the US national debt. And remember, debt is increasing for all countries all around the world, all at the same time, blowing through the roof from China, Australia, United Kingdom, Europe, everywhere. The question is, what are governments going to do? When you look at these numbers, I showed this chart a couple of weeks ago, and it was just eclipsed 31 trillion. A few weeks later, it's 31.46 trillion. Unbelievable. That's huge. And they just added another 1.7 trillion to this below. So drop a comment below if anybody here can calculate 31.46 trillion, add 1.7 trillion, and then multiply that by 4%, which is the kind of soon-to-be Fed funds rate. And I will check the math. Let me know what the interest is on that amount of money. But literally, the point here is debt is exploding. And the reason this channel came about is because we need something hard. And it may not appear that way right now. It has been a brutal year. 2021 was magnificent. 2022, nightmare. But let's begin. Talk about some of the nightmare from the week. We'll talk about the ugly news first, because it's the most. Now, tech stocks for the last 7 days, a lot of red. Google, Microsoft, Apple, Nvidia, down big. Tesla, down big. Down very big. You name it. All across the board, tech stocks are getting hit really, really hard. Now, we did mention last week as well, kind of the last man standing was Apple stock. And it fell this week. So here we are. Now, in terms of, this is a cool little post, all the new 52-week tech stock lows this week. We have, leading the pack, Apple, Tesla, Coinbase, CrowdStrike, GameStop, Lucid, Lumen, Palo Alto Networks, Palantir, Plug Power, Rivian, Roku, Zoom, Zscaler, Brookfield. A lot of these are very, very good companies. And they're all hitting 52-week lows today. But the S&P was not hit that hard, so it shows you it's kind of disruptive technology is really getting smashed in the year 2022. And that doesn't make any sense. So let's look at a quick chart of Apple, since we're looking at charts. Apple broke a 52-week low today, breaching the June bottom of about 130. And you can see there the red is a 200-day moving average, the green is a 50-day moving average, and it literally just fell out of bed, as with the rest of the market. But this is what happens when all of a sudden relative values are compared with each other. It's also the time of the year where people do what's called window dressing, tax harvesting, get rid of crap, clean up their portfolios, or place their bets on faster horses for the next year. And we're seeing a lot of that happening right now. But let's talk about PEG ratios for a second. As you know, if you know this channel, I'm obsessed with PEG ratios. I have been for a very long time. 30 years ago, I knew about this guy, Peter Lynch. He was the king of the PEG. And that's why he beat the market with the Magellan Fund at Fidelity longer and better than anybody ever has in the history of the world. And he loved PEG ratios. So quick intro for those who may not know what a PEG ratio is before I go walk through these numbers. But if you imagine company A, it has the price to earnings to growth rate of say 0.75. Imagine the PE is 30. They're growing at 40%. That equals 0.75. Another example could be a PEG of 2. Same company, PE of 30, divided by, say, 15% growth rate equals 2. Now, the reason I highlight those two simple little cases, if you look at these numbers here, you've got Tesla, forward PE of 20. Okay, unbelievable, considering earnings growth was 100%, quarter over quarter last quarter, 100%. So these numbers are not exactly taken into account the full picture. And the 5-year expected PEG ratio is 0.76. That's under 1. Typically, a peg under 1 is unheard of. Now, let's compare that to two other very, very solid names. Google, Alphabet, PE 16.84, peg ratio 2.13, because growth is slow. If anybody can calculate the growth rate of Google from these ratios, let me know. And that is the 5-year expected price to earnings and growth rate going forward. Apple, a darling of Wall Street. A couple of things I want to highlight here. PE ratio 19.21. 1-year target 176. Currently trading at 130. And forward peg 2.44, which is higher, which means worse than Tesla. Worse than Google. A lot worse. But the other thing is, if you look at things like price to book, Tesla's trading 8.6, Google 4.5, and Apple 41. So the question is, where does logic fall in this market? And the old adage is, the markets can remain irrational longer than you can remain solvent. Well, we're seeing that right now. So everybody, as Elon Musk said over the weekend, be careful with margin. Everybody, be very, very careful with that. Let's dig into some of the craziness happening right now. And again, over time, the stock market is a weighing machine. So don't worry. My bags are packed. All I can do now is swap at this stage. But let's talk about some of the fears that are out there. So this is Tesla stock plunges as China production worries add to investor concerns, Wedbush says. So there was some China concern, but they did halt their car production on Saturday, which they normally close for a week for the Christmas period. And of course, they closed it a day earlier than planned. And of course, the Main Street media freaks out. Oh my God, there's softening demand, closing. Yes, there probably is some softening demand because of a global recession. And China is in a world of hurt with the property market imploding, etc. But technically, this is one extra day from what was already on the schedule. One day, world freaks out. And this is where everybody's looking for an excuse to kind of jump on and pile on the FUD. And everybody's commenting about Tesla right now. It's just bizarre. I remain, as usual, high convicted because I believe in the numbers and I've analyzed Tesla 1,000 ways to Sunday over the last 5 years. Anyway, but there were also rumors for the China factory that they were going to retrofit the production line, which was planned for a long time. But there's also talk now that maybe COVID is impacting a lot of workers at the factory as well. Anyway, Wedbush, they did slash their targets from 250 to 175, but reiterated they could easily do, I think, $6 of earnings next year and easily approach delivery growth rate of 40%. Not 50, 40. But we'll see if they can pull a rabbit out of a hat. And remember, compared to other vehicle manufacturers, even though I don't consider Tesla a vehicle manufacturer, if these guys are hurting with the margins that they have, other traditional ICE manufacturers and car companies will be destroyed, and many will go bankrupt in 2023. In fact, that's one of my predictions for next year. Wait for my 2023 prediction video. So let's look at a couple of things to try and decipher some of this FUD. So if there's softening demand, why is this happening? This is the new inventory of Tesla. Over the last 6 months, you can see it's falling fast. It's actually not far off of where it was back in, 3 months ago or whatever. In addition, let's look at used cars, because a lot of FUD out there regarding used car inventory. Used vehicles for Tesla, the inventory is lower than it was 6 months ago. So again, I don't know what type of data all the articles are looking at. And yes, interest rates are higher. If a car is financed, it will be harder, more expensive to buy. But people do need new cars. And this, I think, is probably the most value-driven vehicle you could probably buy for your money. Anyway, let's talk about this as well. The China demand softening. Another piece here. Details are murky as Tesla achieves record deliveries in China, but reportedly slows down output, updated. So remember, China was doing 100,000 cars a month. That's annualized over 1.2 million a year. And even if they don't sell all the cars in China, the whole Asia-Pac market surrounding China is willing to buy them. The question is, can they ship them there? So again, time will tell exactly what's going on. But again, there is, as Elon says, there's no other company better prepared. I used to call Tesla a recession-proof stock. I'm hearing that term more and more again, and that's why it was a big position for me, because I expected a recession, but I did not expect Tesla to be trading at these levels. Anyhow, let's switch gears to some of the bad news, and there's some of that. Let's talk about Bitcoin. This is the record low Bitcoin volatility. Now, I tried to create a chart that shows the gold at the top is Bitcoin price, volatility is a blue line in the middle, and then the correlation coefficient between Bitcoin price and volatility. Now, normally, you have, in periods of high volatility, you have got good price action and vice versa. But basically now, Bitcoin has flatlined. Record low volatility. So we can't actually derive anything other than the fact that it's just not going anywhere. It's like flatline, like I mentioned before. Now, this one was an interesting chart. It was Dennis Porter who shared this on Twitter. And this is his version of the VIX chart since 2018 or a little bit before. And again, big run-ups, high volatility. Big crashes can also lead to high volatility as well. But this new record low volatility is incredible. And Dennis Porter said last time we had this low volatility, it was followed by a 600% rip up. I don't expect Bitcoin to do a 6x, but I do expect it to recover somewhat in the year 2023 as people get ready for the halving that is coming. So let's look at other people impacted by the Bitcoin miner price, and everything else is from Charles Edwards. And this is by far the most brutal Bitcoin miner capitulation since 2016 and possibly ever. So what you're looking at here are the hash ribbons. And the hash ribbon capitulation captured the lowest hash rate reading of 2022 just now, as miners bankrupt and default under great pressure of squeezed margins globally. Remember, I've been talking about this since July. Any miner with a heavy debt burden is in severe danger. The longer this drags on, the more will hit the wall, unless they can be very creative around how they finance that debt. Let's reach out to Plan B here for a second. Bitcoin Relative Strength Index, RSI, is at an ATL all-time low, hitting 40.5. Never in the history of Bitcoin has it ever been this low. And what does that tell you? Anytime you look at the RSI being this low, typically it's a very strong bottoming signal and a very good time to buy. Not financial advice, just pointing that out. In addition, let's look at ETH staking. It's from Delphi Digital. You can see here that 57% of all ETH is staked, but by only 4 providers. In fact, Lido Finance there you see is the big green color. They represent 30% alone. Then you've got Coinbase, Kraken, Binance, big chunks. So the question is ETH staking centralized? Again, not all ETH is staked, so it's not an issue. But again, interesting to point out as people look into it. Now, let's look at another data, and I talk a lot about developers and developers on chains. Development activity is a good sign for growth and future of a blockchain. But here, 2022 has been nasty. And normally, you can see bear markets are for building, but here they are not. So the total commits on GitHub on the right-hand side has been holding pretty steady for most of the year. But what hasn't is the number of unique active developers on the left-hand side. You can see it's hit an all-time low as well for the year. So the question is, are bear markets for building? Well, if they are, this graph doesn't speak to that. Or maybe there's just so many chains running out of funding and hitting the wall. That's not a good sign. I mentioned last week, I think, as well, or a few days ago, 3,000 ICOs from 2021 are already dead. Again, a lot more to go. Let's look at DEX volume. This also shrank in December. Obviously, December is quiet. If you go look at publications, etc., it's like, there's not much happening. There's no volatility. There's no volume. Everything's kind of selling off quietly with tax loss harvesting, perhaps. I expect a lot of that to happen with crypto over the next few days. And here you see December 2022, less than half, and the month is nearly over. This is a fresh chart, is happening compared to November, which was a great recovery month, but as again, hit the brakes in December. Everybody is skiing or with family or with vacation, which is actually a good thing because you're not missing anything in the market. But for everybody here in the community, thank you for being here. I appreciate each and every one of you. Let's look at some more data from Delphi Digital. Stablecoins constitute a larger share of the total crypto market cap and now hitting 16.5% of the CMC. and that is quite substantial, and it continues to rise. So again, as a lot of other layer ones and cryptocurrencies other than kind of Bitcoin and Ethereum start to shrink and die, the predominance of stablecoins will increase as we go forward. Now, let's switch gears for a sec. This is an interesting one from our friends at Econometrics. There's a lot of talk, especially now at the Fed, trying to figure out what they do. They think, well, we've put the lid on inflation. It's coming down fast, but employment is still high. Therefore, we have to crush the economy a little bit more. This speaks to exactly that topic. So first of all, you can see here a whole bunch of different charts. I added the term deflation on a couple where deflation was in place and unemployment rose. Remember, deflation is a kiss of death, not a good thing to be in. And they are the two top left and the bottom right charts. Also, you'll see here, and as I think I should have pointed out, it's missing. But hang on a second. On this next chart, the red is inflation, hence the deflation runs at bottom, and the blue is unemployment. You want technically the inflation to be about 2 or 3 or 5%. Remember, in reality, over the last 40 years, inflation in the US has never been under 5% when you measure it correctly. And of course, unemployment is the blue. Now, what you see here is you have inflation and unemployment moving in the same direction. You've got inflation and unemployment moving in opposite directions. You've got inflation peaking before unemployment rises and inflation peaking after unemployment rises. So what I'm trying to talk to you here is the Fed have very little control over anything. And this is the current situation we have right now. Remember, the Federal Reserve can influence prices only to the extent that it can create conditions to lower demand for consumers, not control the price of stuff like oil or gold or labor. But what they can do is they can crush the economy and increase unemployment. But right now, per the chart you see here, inflation is on the decline very rapidly, but employment is flat. And this is also in part due to the fact that we have a structural change in how the workforce actually runs as well as we go forward. So that was the ugly news and the bad news out of the way. Let's talk about some good news. And there is a little bit of good news. So first of all, you can see the crypto market the last 7 days divided by Bitcoin, so denominated as Bitcoin. And you can see here ETH, XRP, Doge, Litecoin, BNB, Binance, Cardano, all were up since I was here last with you all. Now let's look at in dollar terms. Again, Bitcoin's up 1.46%, Ethereum's up 4%. BNB, despite all the FUD about Binance going under, 2%. Solana red, not good. XRP is up 37 cents. And everything is kind of not as tragic as you'd make out. But again, extremely low volatility, extremely low volumes. Things are just plugging along. But again, compared to last week, we're actually up. Let's look at a couple more on-chain pieces of data. The Ethereum active addresses hit a 2-year low, which is also a stunning statistic for the chain. But again, maybe that's because there's a lot of activity happening in other areas. In addition, the Solana price stinks. It is low as heck. It's now hit the double bottom layer that it did right after the FTX crisis. But Magic Eden hit over 2 million in daily transactions, which is multiple times this amount, over 2 million transactions per day in Q4 2022. And user activity has grown several multiples through the entire year, despite the fact that everywhere you look, you hear Solana's dead. Again, NFTs aren't the be-all and end-all. Yes, the chain has issues, but the development is still happening. I actually checked the development statistics before. And a final piece of news, because everywhere you go, you hear about CBDCs. And they're coming. The Fed dollar is coming. It's going through its umpteenth pilot right now. The Europeans are planning for one. Sweden, Russia, China, they're all over the place. But this is really, really interesting, I think. And correct me if I'm wrong, everybody, but the Nigerian e-Naira, which is their central bank digital currency, aka SpyCoin, less than 0.5% of Nigerians have used the country's CBDC after a year after its launch. It's actually 14 months, because I checked the numbers. It launched 14 months ago. Only 1 in 200 Nigerians are using it. But according to What's Fueling Bitcoin Adoption article, I can link to it below if you're interested, 1 in 3 Nigerians is using Bitcoin. population of Nigeria is 200 million people. That's about 66 million people using Bitcoin, and nobody is touching the SPY coin. So this bodes well, not only for governments, hopefully they won't implement all these SPY coins out there, but also for Bitcoin adoption down the line, because we know the more people that adopt it, the better it'll be for everybody. So that's it. Hope you guys enjoy the show. Thank you all for being here, and I'll see you all tomorrow. Bye. And I hope you're all enjoying the holidays. I suffered from a long power outage today, and fortunately the weather wasn't too bad. But for those of you out there suffering from travel delays or power outages, be safe, stay warm, have a backup plan, have warm clothes, fire halts, etc. See you soon. Bye.